Good afternoon, everybody. Thank you for joining in. We'll just wait for a couple of minutes to begin. Good day, everyone. Thank you for joining in. We'll just wait for a couple of minutes to start with. I hope you have a wonderful start for the day. We'll just begin in a minute. Okay. Good day, everyone. Thank you for joining us today again. This is Aprimiya Joshi, and I will be the moderator of this session. On behalf of Lera Technologies, welcome to today's webinar from AI Ambition to Enterprise Impact, how leading banks scale AI with confidence. Actually, it's quite interesting to have participants joining from across the banking and financial services ecosystem, apart from in different geographies of the world. And we are delighted to have you with us. A quick brief about Lera Technologies. I'm just sharing my screen. Let me know once my screen is visible. Yeah, is it visible? Okay, so Lera Technologies is a fintech firm, and we have with over 20 years of work experience in deep banking experience and digital transformation and core banking solutions. And now Yeah, sorry, there was some technical glitch from my side. Okay, so Lera Technologies is a firm specializing in an advanced data platforms, core banking solutions, and AI-driven business modernization. A few housekeeping notes before we begin with. So this session is being recorded and it will be shared with all the registered participants after the webinar. And we encourage you to submit your questions through the Q&A window at any point during the session. We'll reserve some time at the end to address them. We'll also be running a couple of quick polls during the session, so we encourage everyone to participate. You could use the chat feature to engage during the session too. Let me set some context, right? We have been hearing about AI as a buzzword since a few months, right? AI has moved, from experimentation to a boardroom priority for banks across the world. Yet, despite increasing investments, many institutions are still trying to answer a few critical questions. Where should we focus first? How do we scale AI safely? Which use cases create real business value? And like, what are leading banks doing differently, right? So today's session aims to answer these questions through practical examples and a structured framework for prioritizing AI initiatives in banking. And also, we have an exclusive giveaway to all the webinar participants, which would be informed after the session. To start with, let me have a quick poll, and I just want to know your views about this. So the question is this, okay, like how do you view the emergence of agentic AI in banking? Do you see it as a next major transformation wave in banking, or do you see like any other technology change in banking? Are you looking have to have some more clarity, or do you see it as an overhyped relative to its near-term impact? Let me know your views. You can submit your poll options. We'll see how the audience is responding for this. Interesting. Thank you all for participating. It's quite interesting to know like 80% of us in the audience feel that it's the next major transformation wave in banking. So quite optimistic and quite positive about this boom of AI, right? Quite interesting. We will kind of come back to these responses later in the session because one of the key themes today is to understand whether agentic AI or AI in general is simply another technology trend or can it be a next operating model for banking. So keep tuned in for this session. Now let's come back to the main part of the session. It's my pleasure to introduce our speaker, Saumil Mody. So Saumil Mody brings over 2 decades of experience across banking, digital transformation, payments, and fintech ecosystems. Having worked extensively with banks and financial institutions on large-scale transformation initiatives, Saumil Mody advises leadership teams on how to build AI-led transformation roadmaps that are grounded in how banks actually operate and deliver measurable business outcomes. Please join me in welcoming Saumil Mody. Over to you, Saumil.
Thanks, AJ, and good afternoon, everyone. Feel really elated to be amongst all of you today, and being able to share our perspective and our point of view as to the entire thing around agentic AI transformation, how it is shaping, banks across the world, how is it shaping the way bankers are looking at it, customers are looking at it, etc., so and so forth, to that extent, right? So probably, over the course of next, 25 to 30 minutes, maybe we'll try to, cover, few things together, to that extent, right? Before we move ahead, I think it's apt, and a very famous saying by Charles Dickens, in his book of Tale of Two Cities, sounds very resonating. It was the worst of the times, it was the best of the times, right? I think the cusp at which AI and banking are today, this one line sums up beautifully in terms of the most exciting times, why we feel in terms of technology evolution for banking and financial services, as well as, comes across with its own share of caveats and dangers, if I may put it across to that extent, right? So what we will do collectively is basically we'll try to understand as to how AI has moved. Why do we think AI is a structural shift? And heartening to see that most of the people over here also have a similar understanding. So that makes it much more easier, when we share our perspective. Uh, how banks have been able to achieve it, where probably the Southeast Asian banks have moved, right, which is where we have the max participation from. What happens, when you get it wrong, right? What are the pitfalls? What have been the challenges which banks have faced, right? And what are the barriers which come across, in terms of scaling AI, and what acts in stalling them, right? And then we move to the last section where it's more to do with providing a practical framework which allows, banks to determine as to where do they start first, right? And how do they progress ahead to that extent, right? So without spending any more time, let's just deep dive into it, right? Now, this is what we would like to present our understanding as to how the technology and computing era has redefined banking operations, right? It started with the mainframe era, which is where system of records were created. Then it moved on to the client server era, where the employees and participants were able to bring in productivity through various tools to that extent. The internet era is where banks were able to reach out to the customers, right, as against being branch led, but over the network. It opened up a huge potential for them. The cloud era and the mobile era is where banks were able to bring in scale in terms of their operations, right? Depending upon the customer demand, depending upon the transaction volumes, right? They could scale up, scale down, right? And then the data and the ML era, about a few years back, is where we were able to predict in terms of the consumer behaviors, the consumer transaction patterns, and how do you create customizations accordingly. And right, and last has been the generative AI era, which basically leads into the tools being able to think, right, and able to amplify and converse in a natural language process, right? But agentic era is totally different, right? And that's a huge shift. So far, if you look at it, all technologies or all transformation which have happened have actually been used to make humans to do their work better, right? Probably they have been rule-based systems, they have been more deterministic. You are able to do it faster, you're able to achieve scale, so on and so forth, right? Agentic era is the first time where the systems or the tools themselves will be able to think, they'll be able to plan, decide, act, and execute, right? It's a sea shift in terms of how banks or bankers have been approaching to that extent, right? So with this backdrop, and when we see that technology is now going to do or act like a doer, right? I think in the room, the question amongst the bankers is no longer whether we should be doing or should not be doing. I think it's all about how much should we allow the the agentic led transformation to have execution control, right, under guarded sort of controls, under guarded mechanism, right, and with proper human oversight to that extent, right? So while we move ahead, I think probably it would be fruitful to also take a moment and see as to where do you see in terms of area where you'd be most comfortable to explore AIs today, right? Does it come across in terms of service, in terms of operations, in terms of risk, right? Sales, right? Probably, if you just can have a quick comment from the participants over here, which will help us to set the context, for our next set of conversations, right? So look forward to it.
Yeah, you could use the chat window for your responses so that we'll be able to see the out inputs from your side.
I guess there some seems to be an issue with the chat window, right? Probably the team will look at it. But let's hold on to that thought, right? And probably now move in terms of seeing as to how, globally banks have been able to see value being derived from, the agentic AI transformation-led services over here, right? And if you look at these four, examples, right, it's more important to focus on the actual value theme which was being or the value lever, if I may use the term, which banks have taken it, right? So let's say, probably Bank of America, they put out their Erica, which is a Gen AI enabled chatbot, which has been able to handle 3 billion, client service requests.
Uh, Saumil, your
Yeah,
voice
so
is getting stuck a bit. Hope bandwidth connection is fine there.
is it better now?
Yeah, better. Please can.
Yeah.
Sorry.
Sorry for the technical glitch. Yeah. So, like Bank of America, Erica has been able to, cut down on the cost of servicing, by almost 30 to 40%, right? So cost reduction was the value lever for Bank of America, right? If I look at Morgan Stanley, it's more to do with, 98% plus adoption of the RM Copilot, which gives them a 30 minutes sort of head start in terms of determining as to what should be the next best product, what's the customer current product overview, right? What would be they would look to increase the revenue sort of top line from those customers, right? OCBC, did out the entire underwriting process being modified using the agentic AI route, which helped in cutting down the speed of decisions, from days to hours to that extent, right? And I think fraud investigation and fraud control, which has been one of the most talked about themes to that extent, right, is where we see HSBC being able to cut down on false positives by 40%. And if they are processing more than a billion transactions, in a month, that's a huge amount of uplift which it gives in, right? Which would, make it important to understand, right? And we have such an informed and august audience in the room, right? What is the value lever which you think basically is very important for the bank right now? Is it more in terms of cost reduction? Is it in terms of revenue upliftment? Is it the speed and risk control, right? Or you're looking at preventing loss across various levers, right? So maybe if you can take another 10-15 seconds and request the audience to share their perspective, it would be really great to understand as to where the shift is happening.
Quite interesting to know various use cases across different bank, across different geographies, and under different verticals. Happy to know your views, as in how has your experience been in this?
It would be really helpful, if we have a two-way sort of a communication over here, right?
I think some people are still thinking and then documenting things. We can continue and then we can take their inputs as and when we kind of progress with the session.
Sure, sure. Fair enough, AJ. So yeah. While these were the global examples which we saw, right? But if you look at from a Southeast Asian region perspective, right, where we have maximum participants, attending today's session, right? I think DBS Bank has been a shining example to that extent, who has invested, for the past decade in terms of improving the data availability and data quality from a foundational aspect, as well as in the last 5 years have been investing, from a Gen AI, ML to an agentic AI perspective, right? And that shows in terms of, more than 1,500 plus models already into production, right? And about 750 million dollar value of economic value already realized to that extent, right? But if we focus on this slide, the idea is not to compare, right, in terms of where one country is, right, relative to the other countries to that extent, right? I think what we need to see, and this is basically an output from a McKinsey study across 330 banks, which was done about a few months back, right? It's to show as to how each region stacks up currently from an AI maturity perspective, right? And Singapore, Malaysia, and I think Indonesia have their money right on the table to that extent, right? But it also highlights that there would be local factors like the digital adoption, right, in terms of the growing mobile consumer base, access to AI technology and AI solution providers, right, and obviously the skill set required to be able to adopt and then implement from a workforce perspective, right? These are the ones which are going to drive further level of maturity when it comes to this particular region. A very good part from this region is that unlike some of the Western global peers, this region has very limited technical debt and no legacy as such, and hence would give a better and a bigger jump start. Once some of these investments start kicking in, right, and then the value starts achieving to that extent, right? Uh, I think it's important while we establish as to what has been the journey of AI across global majors and also from a regional perspective. Right now, we probably let's take a look in terms of what has happened when banks have actually tried to scale their AI programs, right, and why they actually got stalled. Right, what were the major reasons of failure? Right, when AI grows, in an unchecked or an uncontrolled fashion. Right, uh, and these are some of the classic examples where I would like to draw your attention, right? So the top two cards on the left hand corner, right? It talks about the entire the biasness which tends to kick in, and I'm sure people would have heard that AI models have bias. They basically hallucinate in terms of responses, etc. Right? And that's what Apple Card and Earnest Operations had to face when the credit decisioning models which they put into perspective had actually had either a gendered bias crept in, or were not able to determine as to why one was given a loan and the other person was not given the loan to that extent, right? And they had to pay a hefty fine before they had to claw it back, and then they moved it ahead to that extent. The other two cards talks about governance and obviously the cost angle. I think governance, I'm sure people have been talking a lot about it, right? And increasingly, the central banks across the world, right? And more to do so even in the Southeast Asia and the Asian region, right? Talk about MAS or the Central Bank of Malaysia, as well as for India, who have put out consulting papers and draft guidelines to have an AI kill switch, right? So that end of the day, people in the bank have the ultimate control for getting that to an end to that extent, right? Cost has always been a concern, right? Because and two classic examples which we all have read the headlines. Microsoft had to cancel their internal cloud subscription because that costing went and shot the roof. Similarly, Uber also had their entire year's budget finished up in 3 or 3.5 months once it was rolled out, right? Which shows that the runaway cost with more and more tokens being used up, how it becomes a very expensive proposition, right? But the bottom three cards, which we are talking about, it talks also from a customer perspective, right? And that is where I think probably the business heads and the relationship heads and the retail banking heads in the forum would be able to relate to, right? If you put out basically the credit models, right? And there's lack of explainability which comes in, then effectively the central banks don't accept it or the regulators don't accept it, and that's what happened, right? There's a loss of customer trust also because the customer confidence takes a huge beating, right? And that's what Hello Digit faced when the algorithms itself, which were required to bring down the number of overdraft cases, actually ended up suggesting that many overdraft calls, right? It's a total waste of effort and money to over there, right? And obviously the client and revenue loss happens because customers have a broken experience. They don't have an end-to-end understanding as to what the responses are and how they will look at closure of what they are asking for, and that's where they start to taper off to that extent, right? So I think the important aspect to be looked at is that it is not the technology which goes at fault. I think it is when institutions who have not been able to do it in terms of bringing in the guardrails, bringing in the important aspects of responsibility, ownership, governance, etc., and try to look at from a an ROI standpoint is where the issues have cropped up, right? And that's what leads us to determine as to what we have seen in our studies. The scaling gap as to why the programs are stalling are in four large buckets to that extent, right? First is the trust gap. The trust gap is basically, you get, hallucination, a very talked about term. You don't know what the model is responding to. The context seems to have lost. There are inconsistent customer expectations, right? And this is what happened with even Air Canada, who put their chatbot out for answering to customer queries. But then end of the day, they were all hallucinated responses, and the authorities in Canada asked them, the Air Canada team, to take back those responses as well as to pay a penalty because they could not dissociate themselves from that, right? I think governance gap is a very, very critical gap, right? Typically, what we see that governance comes across as an afterthought, right? And then the cost of putting all those foundational as well as guardrails into effect becomes a huge exponential sort of a cost, right? As against you think of governance being put at the start of the program itself, right? So you have lack of explainability, you have lack of auditability, and then the regulators are always banging at your door saying that, hey, why did this response come, and can you explain the entire audit trail in terms of how you came to this particular conclusion, right? Uh, Third aspect is in terms of the operating model gap, right? Effectively, what we have seen is that pilots happen across the bank. Every business vertical or every domain typically picks up, in terms of their own use cases, and they try to do experiments around it, right? But the problem arises when there is a lack of unified view of in terms of how you want to scale it, right? Be it in terms of data, be it in terms of customer, be it in terms of transaction information, be it in terms of the patterns which are being happened, right, etc. So you have a very fragmented architecture because of which you're not able to get a scale for whatever seems successful in an experimentative mode, but then it fails to move ahead to the next level, right? And last and most important, I think, is the value gap. Any use case, if you're not able to determine as to what value it is going to derive, right, then it becomes a cause of concern because what we see increasingly, bankers tend to have, cost getting escalated, right? But then ROIs in terms of whether it's helping in, revenue expansion or risk control or fraud management, right, and other things becomes a challenge. And that's what even the McKinsey survey said that probably one in five rather sorry, three in five are not able to see the ROI being measured to the tune of what they would have expected, right? So that's what we have seen to that effect, right? I really want to avoid a monologue over here, right? And probably I'll take a pause and would be happy to take any immediate feedback or any immediate questions which come to anyone's mind, right? And would be happy to discuss them. AJ, what do you think?
Definitely, Saumil. It's quite insightful to know how these gaps become breaks or impediments for the growth and success of AI, right? So I would definitely urge the audience to kind of use the chat feature and kind of let us know your views, as in, how do you view these things from your perspective? I hope people are not overwhelmed or startled with these kind of gaps, which is quite evident from the research out there. So I think, Saumil, we should go ahead and then let people process these things, and then probably we can receive more questions in Q&A or anything in the upcoming chat windows.
Sure, sure. So I think now probably this section we already have covered as to what has been the major pitfalls, right, when growth goes unchecked. right? And what is the scaling gap to that extent? Which now brings to the most important and the exciting part of the webinar, right? What should be the framework? What should be the approach? Let's say bankers can take over here, which will help them in answering or trying to address all of these gaps to a certain extent, right? Uh, First and foremost, I think it's very important that we classify any of the business use case in terms of value themes, right? And this is basis our numerous interactions with banks across the globe, right? To that extent, as to what are the value themes, if we are able to bucket it out for the use cases, which can give some sort of structure and direction as to how banks want to look at it, right? So let's say if it's a customer growth engine which is looking to increase the revenue by acquisition, retention, or trying to do a product cross sell, right? The credit and risk intelligence basically looks at managing the risk and control aspects. Also the speed of decisioning, right? From an let's say a pre-underwriting or a pre-sanction process, how do you try to bring in efficiencies over there and more data points, as well as more importantly, once you have the loan disbursed and the repayments kicking in, right? How do you derive early warning signals or early warning risk detection, which can help you to avoid a portfolio level loss, a product level loss, and eventually a bank level loss from a financial and an operational standpoint, right? Third, fraud. And I saw one comment and a question that, fraud seems to hog the limelight across the banks. So yes, what in terms of detection, prevention, right? And how do we reduce from an AML perspective in terms of false positives? I think that is one big problem which banks face it, right? Largely. Operations and cost efficiency. I think this is, a huge playground available, right? And there are plethora of options available in terms of how do you bring out the scale, right? In terms of cost reduction, the important aspect is how you're able to map a customer journey to an operations journey. How do you align them? How do you try to reduce the redundancies? Where do you bring in the automation? Where do you bring in the orchestration, right? The capture, extract, right? And then being able to put that to use becomes a huge, huge opportunity from an operational standpoint, right? And I think the last and foremost is the workforce augmentation, right? Because end of the day, there are going to be people who are going to get these things implemented, right? So it's important that the skill set is appended significantly for them to drive adoption. It's important to make them familiar. It's important that they are able to understand the outcomes which are come, because as we all know, the AI systems are probabilistic in nature, right? And hence human mind tends to think that I was used to getting a defined outcome. How do I move towards more probability of getting that probability more realistic and deterministic in that sense, right? Right. And also, how does it help him to elevate his role, right? From being a doer, right? But to be a more decision maker, more thinker, right? And able to uplift the entire end-to-end stuff, right? And that's where these value themes, play a very, very important role to that effect, right? Moving on, what also we would like to share the perspective is that once you have the value theme, right, it's important to slot the use cases depending upon which part of the bank you are in, whether you're in front office, you're in mid office, or in back office to that extent, right? And that will help you in generating the value heat map to that extent, right? So if I take an example, right, if I take a mid office and credit and risk intelligence, right, and I'll just carry the same example so that there is continuity, the early warning risk agent. Now that's basically a huge value for the mid office, because it helps them in trying to understand the transaction patterns, the behaviors in terms of repayments, as well as the covenant data, right, which is available for the borrowers, right, and are looking to predict and trying to prevent the possibility of a loan becoming NPL, and trying to do that, let's say 30 days or 60 days before the event, right? So that helps them enough time to take a corrective action in terms of either doing a customer outreach, looking to do a top up, looking to do an entire structuring of the loan, so and so forth, right? So that sort of value creation can be achieved if you are able to slot the use cases to that extent, right? What our perspective has been, that when you look at it from a back office or a mid office perspective, right, that and you basically look to invest in terms of different use cases to that extent, the sustained value comes and it basically compounds over a period of time, right? Maybe a bit boring, from a front office standpoint, right, where revenue is something which really kicks in. But the back office and the mid office is where you may have a higher maturity of value getting compounded over a period of time to that extent, right? Which basically now takes us to basically to the most important and the most interesting section, right? What is the framework which we all have been speaking about, right? Before that, I think it's apt that we take a quick poll over here, and I request AJ to probably help facilitate that in terms of where the challenges lie. Over to you, AJ.
Sure. Thank you, Saumil. Before I kind of get into the poll, I think we have a couple of interesting questions here, Saumil. I think few of them you addressed when you kind of explained as different use cases across different departments and verticals of banking, and also the front office, mid office, and back office. I think a very big question is how much AI will replace the percentage of workforce in the banks. Like, do you have any kind of inputs in that perspective?
Sorry, AJ, I missed the last part of the question. If you can come again.
Yeah, so basically the question is about workforce replacement as in
Right.
when AI is adopted. So can you just throw some light on that?
Uh, I think basis our conversations and my take on that, we don't see immediate replacement or reduction of the workforce, right? From a banking perspective, right? Effectively, what AI is going to do, right, is to help in bridging or probably uplifting from a productivity, from a scale perspective, right? So let's take an example, right? Probably let's if we look at from an operations shop perspective today with an X number of headcount, right? There is a Y amount of volumes or business which can be supported to that extent, right? With AI coming in, with agents coming in from an orchestration or from an onboarding or KYC management perspective, right? The idea is not in terms of how much you're going to reduce the cost in terms of headcount, right? I think the idea is with the same headcount and with improved efficiency and higher productivity, would it help in achieving a 2x, 4x, or 5x support for the scale or growth of business to that extent? All right. Same way from a front office perspective. The important thing is that you want more and more customers to be onboarded. You want higher penetration. You want a higher cross sell, which helps in improving your revenue realization to that extent. Does it mean you're going to reduce the number of RMs or feet on street? No, that's not what I think. It's all about with the same level of headcount and with a minimal increment, right? Effectively, you are able to aim for a higher growth rate to that extent, right? So I think the perspective needs to probably be looked in that lens as against looking at in terms of reduction in the headcount.
Great. Thank you, Saumil. I think it's much more, how AI can augment our day-to-day working in the banks, and then how it can enable people who can work at either in front office, back office, or mid office. Kind of augmenting is not from the replacement point of view, but how efficiency can be enabled through it, right? Perfect. So let's get into the second poll. We have kind of heard a lot of insights on the gaps, on the barriers, and several use cases across different organizations. So we would like to know what's your input from your own experience, right? So the second question, or in the second poll, talks about the biggest barrier to kind of scaling AI in your organization today. Like, what do you feel? It is a lack of a clear business use case, or again, is it issue with the data quality and all those things, or again, the governance break, what kind of Sawmill was mentioning, or you're not able to determine kind of where to start your journey from. Let me know your views. Tamil, it's quite interesting. What we talked about the different gaps and all. I think governance and accountability is kind of the highest. 46% of the responses kind of have been aligning towards that. I think the framework which we'll be covering next would be quite helpful for all our attendees to kind of understand how to navigate these things, and then how can we make best use out of this AI. So very eager to hear about your framework, Somil. Over to you.
Hey, thank you. And, thanks everyone for sharing your responses. Yeah, governance and accountability do seem to hog the limelight, right? And I see other responses also gaining equal traction or similar to it in terms of lack of business prioritization, what use cases to come in, so and so forth, right? That's where now, we move to our framework, which we call the value prioritization framework or the RISE framework, right? Which is basically realize, strengthen, evaluate, and invest. Please don't look at it from a loop perspective, right? And I would like to take an example, right? Right now, I think the FIFA World Cup fever is gripping the entire world, right? And let me draw an analogy to how it will make us understand this framework, right? Let's take a use case where probably if it took again the early warning risk agent, right? How do we determine this framework? This framework is basically looking at in two axes. What is the impact value which it can create, right? And what is the level of readiness? When you talk about the impact, it's more in terms of the value being created on the table. What is the time to value, right? How much of delta it can bring onto the table? And readiness would be in terms of your guardrails, your human oversight, your data readiness, your integration being in place, so and so forth to that extent, right? So an early warning risk agent, let's put it in this matrix, right? Does it have a high impact? Absolutely, right? Because if you're able to predict the likelihood of a loan going bad or an NPL happening to that extent, that's a huge, huge impact at a borrower level, right? At a portfolio level, you're able to avoid the financial loss, the operational loss, and eventually even from a regulatory standpoint, right? What would I do? If I were to take a decision, I'll just put it in the realize framework, right? To that extent, because in terms of the data readiness or in terms of the oversight also, that is pretty high because you know their payment patterns, you know the covenants, you know their transaction behavior, you have the entire data which you keep on getting on a defined frequency from the customer to that extent, right? So taking an analogy with football, right? That's like taking a penalty, right? I just need to dodge basically the goalkeeper, right? And I can score. So I'll basically look at that use case, I'll deploy it, I'll try to get feedback onto it, and then I'll scale it across business lines with confidence, right? Let me take another example, the RM Copilot, right? And we saw in terms of what Morgan Stanley has achieved. Let's evaluate impact. Definitely high because it is directly hitting the top line from a bank perspective. Number of customers, revenue, fees, right? Product cross sell, etc. So on and so forth. So there's no question in terms of the impact which can generate. In terms of readiness, does it have the same level of readiness? Maybe not, because there would be good amount of groundwork which will require to be done, right? Because you need to have a unified view of the customer across the transactions it has been doing across the products, right? You would need maybe some external reference to third party applications in terms of how their behaviors or spending patterns have been to that extent, right? And also profiling of the customer, right? Which will require some amount of investment and some amount of readiness being created to that extent, right? And then people testing the model and having a good amount of oversight. So I'll put it in the invest quadrant to that extent, right? Maybe a good analogy would be, let's say, getting a corner kick, right, in the match of football. Not as straightforward as doing a penalty, but then you still are in the D for the opponent, right? And it would be relatively easier for you to and a higher chance of scoring a goal to that extent, right? And maybe if I have to take another example of let's say back office co-pilots, right, which is more in terms of your SOPs, your policies, your procedures, right, documentation, understanding, right, which helps in basically uplifting the employees' understanding of what the technical and the functional know-how is, right? It helps them to have a much wider and a deeper perspective to that extent, right? From a readiness standpoint, again, it is high on readiness, and because you just have all your policies, procedures, etc., and all documents, you can put it into one place and you can have a co-pilot agent running on top of it, right? But in terms of impact, I think it's more of indirect impact which it can create, because it will enable people in their respective functions to be able to perform better, improve productivity, have a lower sort of time to maturity, right? And their learning curve also becomes much more sharper. But we should not consider it to be a strategic bet that it will result in the same level of impactfulness to that extent, right? So this is like taking a free kick, in the half of the opponent, but then you still have some journey to be done through your right and left wingers, and probably before you give it to the striker, and the striker is able to convert the goal to that extent, right? So yeah, the idea of this framework is help banks to determine. It's not about the fanciest of the use cases to be done first. It's more to do where you want to start first, and this is where, from a bank to bank perspective, the output will change, right? The earlier slide when we talked about the value heat map, right, is more of taking like weather forecast of the region, that it's going to rain throughout the country today, right? But then this is like charting your own path. If you were to reach from destination one, sorry, point one to destination two, as to what route you would take, so that it takes the least amount of effort, it takes the highest amount of value, and you're able to reach there fastest to that extent, right? So that's what we believe Rise will help you to determine what use cases to start first, where you need to fix in from your foundational aspects, right? And that's where the data readiness, your governance guardrails, etc., which come into picture, right? And how do you determine impact in your own local ecosystem, right, within the bank, as to what is more impactful for you? Do you want to go for the top line? Do you want to look at more from a cost, from a risk control perspective, etc., right? So this is what probably the framework would help you to achieve those objectives on an individual basis to that extent, right? Maybe it would be interesting to hear that if you were to apply this framework in some of the use cases, which would be, let's say, the top one or two use cases which you would want to look to proliferate within your bank to that extent, right? With this backdrop.
Yes, Samuel. I think, it also answers one of the questions from one of a participant. Their exact question was which use case to prioritize, as in what should be the working order. I think this is very helpful for them. And, I also believe this, this RISE framework is quite synonymous on how organizations can actually rise in this huge wave of AI, right? So it's quite promising. Thank you, Saumil, for this. As promised, we'll now open the floor for some questions. You can either use the Q&A option or the chat window to kind of pull in your questions. To start with, Saumil, I have one question here from quality assurance perspective, right? With AI testing and all those things, is there any difference in approach? How do we kind of test these applications or with these AI use cases before going live? It is quite traditional. It's similar to that, or is there any change with this AI approach?
I think the important aspect which needs to change, right, as to who is basically driving this entire change, right? I think unlike other traditional technologies, basically the IT team manages the end-to-end show. They go ahead with developing the use cases, developing the solutions, working with service providers, testing it, right, and then rolling it out to, let's say, the business users to probably implement them and start using them. I think with AI, the entire mindset has to shift, right? The ownership in terms of defining the outcome, what is being expected, the ROI, the business case itself, right, is what now rests with the frontline office, or basically the business user to that extent, right? Whichever part of the bank he may be. So he becomes much more accountable and responsible in order to, start laying the rules of the land, right? And then how he translates them into, what sort of outcome is he expecting, right? Which is what then the backend teams, try to work it out and, give it as an output back to him, right? So the entire aspect of testing undergoes a change where you go from a system to a functional testing. Here it is more driven, in an agile fashion, more from a functional perspective, more from a outcome orientation, right? And then you keep on, determining and having a feedback mechanism so that the level of maturity comes in, what you're looking for. So in my mind, that's the bigger shift which people need to, get accustomed to.
Got it. Thank you, Saumil, for this. I encourage all others also to kind of pick their brains, and whatever questions pops up, please use the chat window. Also, Saumil, we have one more question. I think it's more to do with kind of handling client queries, the business as usual client queries. I think it's better you put some more light on the front office part, like how AI can help them addressing the client queries and the day-to-day work for them, for the bankers.
Sure. So, that's where I think I'll take an example of what Bank of America did, right? Where they put out the Erica bot, right, which is a Gen AI bot in terms of managing the client queries to that extent, right? It's important for us to determine as to how what is the approach we want to take from a classification standpoint, right? Where let's say a Gen AI tool or an intelligent bot will help us in classifying the nature of queries, right? Whether they tend to be more in terms of customer awareness or client education to that extent, right? How it can help in terms of looking at the repetitive nature of queries which keep on coming in, whether they are process related, whether they are mundane day to day banking operations update to that extent, account related queries or information to that extent, right? Which are more templatized responses, if I may say, to that extent, right? Or these are more in terms of complaints, right? Or issues which, let's say, customers face, and that's how they would want to have a point of interaction to that extent, right? So, moment you are able to classify on the nature of queries, then probably you can start defining what your line of action could be to that extent, right? Whether you want to have more informed and evolved sort of responses coming across to the same set of queries, right? How do you then result in probably updating your policies, your procedures, right? Your client service notes, etc., so on and so forth, right? Or does it call for even certain plugging the leakages in terms of processes or in terms of lack of certain broken journeys to that extent, right? Which becomes an important feedback tool for bankers to go and determine as to what sort of action should be taken to that extent, right? So that is where you're looking at in terms of improving your first time right response. You are looking in terms of reducing the repetitive nature of the same query across a larger customer base, right? And third, in overall basis, you're looking to reduce the turnaround time through which you can go back to the customer and thereby reducing the cost of handling that query. So that's the output which you would be looking at.
Perfect. Thank you, Samil. Samil, I think there's one more interesting question from Nikhil. It talks about security testing in banking, which kinds of safeguards critical financial assets and customer data against, real world cyber attacks. Like, the question is like how AI can help us in identifying the vulnerabilities or detecting security tests or kind of improving testing efficiency. So, any real world experiences or any best practices you have, or any what does security testing look like in this AI world?
So I think it's a very loaded question. Firstly, it's a very great question. It's a very loaded question, and very difficult to probably quantify. Looking at the novelty of the application itself or the tools itself to that extent, right? Obviously, there are some amount of research which we have done to that extent, right? What I would suggest, Nikhil, is that probably we'll get back to you through a detailed response in terms of how security testing across some of the live use cases across various banks have been. resulting in improving their, improving their or tightening their, security guardrails to that extent, right? And how it is driving their efficiencies, right? So allow us time to get back to you on that, given that, it requires a detailed response rather than me cutting the corners and just giving you a simple response to that extent. Yeah.
Great. Yeah, it's a quite loaded question. Nikhil will definitely, kind of give a detailed response how loaded was your questions, so that, we'll be able to address all the parts of the question. Uh, in the best interest of time, we'll take one more question. I'll just give a couple of minutes to kind of see if anybody else has any other questions. Okay, Saumil, I think we have one question now. It's basically specifically to a specific use case. I'll just read it out so that I don't lose something while paraphrasing it. Suppose an AI model identifies a customer as a high risk for loan default, but the relationship manager believes the customer has strong repayment potential based on recent business performance. How should an organization expect such conflicts between AI recommendations and human judgment to be handled? I think it's quite interesting, right?
Yeah.
We also say human-led AI governance, right? Like, how do you kind of address this issue, the to balance between these two stakeholders? How do you do it, Saman?
Uh, Again, wonderful question, and I think very apt question looking at, how most of the banks are beset with similar scenario, right? As to what level do they allow the agent to recommend and probably take an action, and where the human should come to that extent, right? Talking about this scenario, obviously, moment you have an agent who is able to predict the likelihood of a default happening, which is high in risk standpoint, right? uh, I think the premise is that prediction has come probably with a reasonable amount of time available before the actual event happening, right? Maybe a few weeks or probably a month or so before the event can happen, right? And that's where we feel is where the role of agent now recommending the next course of action is to the person, maybe a monitoring analyst or a credit risk analyst, in terms of taking a much more informed decision, right? So it leaves him with enough room that, hey, probably I'll do an outreach to a customer, right? I know that the customer may be undergoing through a tough time. Probably the business cycle is not conducive. There is seasonality which is playing in around, right? And if the business is not great, then obviously the income would be less, the sales may not be happening, and so his repayment appetite may be going and taking a beat, right? And that's where probably the human judgment becomes very critical, and that is where it should take a precedence over what the model or the agent is recommending for doing an outreach, looking at opportunities of either restructuring or doing a top up, or probably having a more informed conversation, or look for other risk mitigants in terms of, hey, can we do something else from a cash flow management standpoint to that extent, right? So that's how AI would play a role of supporting, equipping, right, and making the person who is responsible for making an outreach to the customer much more, informed when he's having that conversation, as against having the same conversation when the event has already happened.
Perfect. Thank you, Saumil. It's quite overwhelming, actually, to see the full potential of AI getting unleashed. I definitely am very confident that many people have many more queries, as their neurons are getting fired. But definitely to address this, as promised in the start of this session, we are offering an exclusive 1 hour AI advisory session with our experts to all the webinar participants interested in exploring their own AI readiness journey. I would urge make the best use out of this opportunity. Our team from Lera would be reaching out to you for this and happy to have those conversations. So, as we kind of 2 minutes to one, we'll kind of wrap up today's session. Too many key takeaways for me, but definitely few stand out. AI success is increasingly becoming an execution challenge, rather than a technology challenge. The winners will be institutions that prioritize and operationalize AI systematically, especially with the framework what Somil was sharing. And definitely scaling AI requires clear sequencing, governance, and business ownership to address all those gaps which we kind of got to know in this session. As mentioned earlier, thank you all for joining in, and the recording and the presentation materials would be shared with all registered participants. I understand now what all you would be expecting from me to reveal a surprise. So I would urge you to make best use out of this opportunity and then have these conversations going forward. We'll also be sharing a feedback form. Happy to know your feedback and also what else you would want to listen from us. Like these are very hot topics. So definitely we'll be tuned in to listen to your responses. Thank you once again. And we genuinely hope to continue this conversation going forward. Have a wonderful day ahead. Thank you all for joining in. Thank you, Saumil.
Thank you, AJ, for being wonderful moderator and helping with the entire session. Thanks a lot. Your insights were equally appealing, if not less. Thank you, and thank you everyone for joining and taking time out today. Thank you so much.
Thank you all. Hope to see you all soon at some other point of time. Thank you all.